It's the time of the year again where people get really anxious of coming to next year and how to reduce taxes. So here comes my annual SRS Supplementary Retirement Scheme video, and I'll discuss the best strategy, the ultimate strategy for you to optimize this account so that it can help you reduce your taxes and at the same time get the best bang out of your buck. Okay, let's start off with the definition of what is Supplementary Retirement Scheme, or SRS in short first. So it is essentially a voluntary retirement scheme whereby you can voluntarily put in money into this SRS account so that it can help you defray your taxes for the current year, and it will be deferred to the future years where you are much older and maybe you have less income. Then that's where it is becoming a tax advantage account. Also, the fact that SRS money can be used for investment. So at one point, you are saving on your taxes, and at the other point, you are also able to invest your SRS money for better returns compared to the bank interest rates. So the current SRS contribution limit for Singaporeans and PRs is at $15,300, whereas for foreigners it is at $35,700. Then you may ask, why foreigners so good, right? Can have 35.7k of limit, whereas Singapore and PR only get 15.3k. Because you must remember that Singapore's and PR, they do have CPF contributions, which is a tax advantage account as well. Because CPF contributions, even mandatory contributions by yourself, are tax exempt, which means that they are not chargeable for tax. And foreigners do not have the CPF account, right? Because it's a SG and PR benefit. So foreigners will likely suffer from higher taxes, and this SRS can help them reduce the tax chargeable income as well. So how SRS works is that it is highly dependent on the statutory retirement age, which is currently at age 63. So when you reach the statutory retirement age, which is currently at 63, it means that you can withdraw your SRS money without any additional tax penalty. Because if you do want to withdraw your SRS monies before the age of 63 right now, it's not that you cannot do it, you can definitely do it, but it will be subjected to an additional 5% tax based on what you have withdrawn out of your SRS. So in order for people to avoid that 5% penalty, they try to withdraw it after 63, because that's the main point of SRS, right? To build up your retirement funds such that at age 63, when you're fully retired, then you withdraw those monies, right, and you don't have any other side income, then you will be really a tax advantage account. Because one more thing about SRS is that once you have reached the age of 63 and you withdraw it, only 50% of the amount that you withdraw will be taxed as income. So for example, when you reach the age of 63, your SRS has hit the amount of 400,000 Singapore dollars, then you want to withdraw within 10 years, right? You want to withdraw like 40,000 per year. So you request a withdrawal at age 63, 40,000 will be considered your income for IRAS to tax you. But you realize that only 50% of it will be taxed, right? Based on SRS rules. So 50% of 40k, that is 20k. And based on IRAS current tax regulations, any income below 20k, you will not be taxed. Okay, zero tax rate on below 20k income. So your SRS essentially become tax-free because of this 50% rule. Isn't that great? But I feel that even if your SRS has grown to maybe like 800,000 and you want to withdraw 80k per year, it's not too bad, right? Because it's only 50% will be taxed. So don't mind too much about that 400,000 number. I think if your SRS account can grow so high based on your investment compounded returns, I think that's a good problem to have. So when should we really contribute to SRS for tax relief? I felt that this is a highly subjective rate because some people prefer it to have above 11.5%. That's when you have hit 80,000 at least chargeable income. But for myself, I did it when I was at 7% tax bracket. So that's like above 40k chargeable income. I think it's really subjective. I think 7% for me is a good enough to have for tax relief. So that's when I felt that SRS was worth it for me. Because if you take 15.3k multiplied by 7%, that is $1,071 of tax savings that you could save if you contributed to SRS at that tax bracket. Of course, if you go along the higher tax bracket, there are more taxes saved because that's just a numbers game, right? But I felt that when you have reached that higher level of income, you can do a lot more tax planning that I won't discuss in this video. Anyway, if you have not signed up for any SRS account yet, you could do so with DBS because they are offering like $50 if you open an SRS account with them and deposit $10,000 as an initial deposit. So I felt that why not just get the $50 for free money. And if you like more free money, then consider taking a look at the offer from the sponsor. You know, there are some really bad news right now because the core inflation in Singapore announced by MAS has risen to 5.1%. But you know, the good news is you can now sign up for Moomoo account using my referral link in the comments, or you can actually scan the QR code right here. And I still can't understand why some of you haven't signed up yet, because once you have deposited $2,700 as your initial deposit, you can get a $40 cashback coupon and also one chance to spin the stock wheel, and you can get up to one free Amazon stock. Now, if you want a really good reason to use Moomoo, you'll be glad to hear that they will be offering 0 commissions for all US stocks and ETFs forever. And at the same time, they're offering 0 platform fees for the first year. And even after the first year, the platform fee is just 0.99 per order. With the Moomoo app, you also get real-time data of the market as well as live prices, you know. And you know that's quite important, right? Because these features in some other brokers are actually chargeable, and Moomoo is giving it to you for free. So hurry up, use my referral link down below or scan the QR code to sign up for your Moomoo account right now. Okay, so SRS, I talk about the tax relief benefit, right? But I have not talked about how you can then use your SRS after you have contributed to it. So the main thing of SRS is that you need to use it to invest. You cannot just let it sit there like a lazy bum, right? So SRS is very popular in investing in Singapore listed equities, Singapore listed bonds, or even Singapore savings bond and all that stuff. So let's go through some of them today. So for Singapore savings bond, I'm sure you're very familiar with them. So instead of using your cash to buy these SSBs, you can use your SRS to fund it. So it's like a double benefit game, right? First, you save on the taxes. Second, you get some interest. In fact, high interest on the SSB. So if you're considering doing SRS and SSB already, then why not just use your SRS to buy the SSB instead of using cash? I think that will be a good benefit to some of you. Okay, the next way is to invest. And in order for you to invest, you cannot do it yourself. You have to go through a broker or an advisor. Now, specifically for digital advisor, there is Endowers. But before that, you have to know that Endowers charges you an excess fee every year, right? For FundSmart, the lowest strategy is at 0.3% per annum. So you have to add that into your management fee cost. But you see, Endowers do offer like a very low cost monthly funds. Like for example, the Amundi Prime USA fund is charging you 0.05% per annum on their expense ratio. So your total expense ratio for investing in Amundi Prime US is 0.3 FundSmart plus 0.05, that is 0.35%. And Amundi Prime USA fund essentially tracks like the large and mid-cap companies within the US listed equities. So you are invested in like the big techs, the big conglomerates, okay, like your Microsoft, Amazon, Google, and all this, Apple. So it's very similar to S&P 500, but it's not tracking the S&P 500. But if you prefer like a more world index kind of fund, then Amundi also have the index MSCI fund, okay, that has an expense ratio of 0.18%, which you can consider as well. But if you add in the FundSmart fee, the total expense ratio will be like 0.48%, which is relatively low too, if you be honest. And the good news is that Endowers is offering my viewers additional $43 on top of the $20 normal excess fee that you receive for other kind of users. So if you're interested in using Endowers, you want to get like a total of $63 of excess fee credits as a new user, then use my referral link down below. Okay, the last way of investment is through POEMS Cash Plus. Now, why POEMS Cash Plus is because it offers a very competitive rate of no minimum commissions at 0.08%. So you can use POEMS Cash Plus to buy your Singapore listed stocks, equities, you want to buy banks, you want to buy REITs, or even if you want to buy the S&P 500 index, you can buy the ticker S27. With the 0.08% per order with no minimum commission, I think this is the cheapest way you can invest your SRS. Now, why POEMS Cash Plus, right, is because if you look at traditional bank brokers by other banks, then you see they have a minimum commission of $25, which is not ideal, you know, because maybe your investment amount is like $2,000 and you need to pay like $25. That's a very expensive commission rate in terms of percentage. So if you do want to consider using POEMS Cash Plus and you don't know about how to get going with it, then you can consider watching my previous POEMS Cash Plus video, because I'll show a walkthrough of how I invested S&P 500 through POEMS Cash Plus.